Silver set to soar to $50 per ounce, question mark. In today's video update, we consider the outlook for silver and the potential for silver to soar to $50 per ounce as it did in its bull market in the 1970s and indeed in its bull market in the 2000s. Hi, I'm Marco Byrne, the Research Director of GoldCore.com, your gold and silver delivery and storage specialist. And in today's video update, we're going to look at a topic that is and a metal that is very close to our heart, which is poor man's gold, silver. And it's a silver that's very overlooked by mainstream investors, by the mainstream media. Gold is very rarely covered in the media, but silver is covered even less so. So I think the fundamentals of silver are not understood, and the value opportunity that silver represents today is not understood by the vast majority of investors, as it wasn't understood in the mid-2000s when we first started covering silver in quite a significant way. So I'm going to go straight into, so briefly look at the fundamentals, and then I'm going to go in and look at some very important charts that show a picture paints 1,000 words, as they say. And I think when you look at the charts for silver, I think that it's quite very interesting indeed. So I'm going to have a look at our friends here to begin with. Capital Economics. These are one of the mainstream research houses in the UK, and they are, very good indeed. Excellent research they do on the global economy and on local economies and on the macro side, but they also look at asset classes and indeed precious metals. And we've known them for a long time. We've shared our research over the years, and they are very, very good. So they just put out this research report March 19th, and I'm not going to read it verbatim, but basically what they are saying is that there is slightly weaker industrial demand, but that is being made up for by safe haven demand. People are concerned obviously about the slowdown in the global economy, which is impacting the industrial demand, but it's actually been compensated for by safe haven flows. As stock markets internationally come under pressure, people are beginning to diversify into gold and indeed silver, which are both safe haven assets. Gold more so obviously, but also silver. So Capital Economics are basically saying that they expect silver prices to rally by more than 10% in this year, so in 2019. So and we think that's quite conservative. They're very conservative by nature, and they have to be, and they attribute that, as I said, to investment demand. They look at the US mint silver coin sales as an indication of demand, and that those sales have been very strong indeed, so much so that the US mint actually briefly ran out of stock. So that's one of the big things that they're looking at, is the increase in investment demand, but they're also looking on the supply side. Very interesting, the supply from the big silver mines internationally. There are very few primary silver mines. Most silver is a byproduct of base metal mining. So when you tend to get a global slowdown, there tends to be less demand for base metals, which are used in the industry, and then consequently there tends to be less production of base metals and less production of silver. So silver is quite interesting in that regard in terms of being quite inelastic, and therefore it tends to fall. At the start of a recession, you can see silver prices fall, but then it tends to rise quite significantly subsequently as you see investment demand fall, and also the supply of silver fall due to being a byproduct of a base metal mining. So mine production, as I say, is stuttering, and they estimate that a dozen of the largest silver mines saw output drop by 9% in 2018. So you can see that here. This is silver production at the world's largest mines, and you can see in the sort of violet color, if you will, the blue color, that's 2017 to the left, and then 2018 to the right. So you can see these are some of the biggest silver mines in the world, and you can see most of them production actually fell, which is interesting. And then you can see here silver investment demand, chart 4 here. This is very interesting because it shows how silver ETF demand increased very significantly in 09, 010. It then actually fell quite significantly when the silver price fell in 2011. It came back a bit in 2012. It's actually been largely absent in recent years, but silver investment demand, ETF demand, came back there in 2016. And they expect 2017, 2018 essentially flat. They're expecting it to grow quite significantly in 2019. But meanwhile, what I do find interesting is what we specialize in, coin and bar demand, has actually been quite robust throughout the period. Obviously increased from 2009, 2010, 2011. Very high in 2015, came off 2016, and indeed 2017, 2018. So it's been robust throughout the period until quite recently, where it came off a bit, but it has remained quite strong, and they believe that it's going to increase, and that would be very much our view. We do think that the significant increase that we saw in silver coin and bar demand that was seen in the 08, 09, 010, 011 period will be seen in the coming months and years. Silver is a very, very small market. The above ground refined silver supplies are very small indeed. There's various estimates, but I think that the key estimate is it's about 1.3 billion ounces of above ground refined silver. So therefore, the above ground refined silver market is only some 20 billion in terms of capitalization, if you will, market cap. And therefore, all it takes is a small amount of investment demand and diversification out of equities, out of bonds, indeed out of gold into silver to see quite dramatic response in the price. So it's good research. The bottom line is they expect the silver price to rise to 1750 per ounce by the end of 2019 from around 1540 today, fueled in part by ETF demand rebounding to 100 million ounces. So we will share that view, and we'd be more bullish on that, particularly in the medium and long term. So why do we say that? Well, we say it for actually many. This is before we get into that, just look at the chart of silver. So this is a 10-year chart from our website, GoldCore.com. And you can see that silver prices are back at the level seen in 2009. And silver prices went up. They nearly touched $50 per ounce. This is a monthly close. So April 1st, 2011, 47.91. And then obviously we went into the bear market, and there was a lot of manipulation here as well, involving pushing the silver price lower and capping it. And today we're down here. So I think most chartists would look at that and say there's potentially value at these levels. And we've had a massive period of consolidation, between the 13 to $22 level for the last 6-7 years, and generally the longer the period of consolidation, the bigger the move upwards or downwards. And there's very few analysts, if any, who are suggesting that the silver price is going to go lower. So the question is really when does it go higher, and by how much? So we don't have crystal balls. We can't say exactly when it will happen or by exactly how much. We put $50 per ounce as an estimate because obviously that was the high in 1980 and the high in more recently in 2011. And we do believe that that's quite a conservative price target in the next 2, 3, 4 years. So, and we have good form in this regard, shall we say. I mean, here we wrote about this in May 2007 when silver was trading at $15 per ounce, $14 per ounce, should I say. We said we believed it was going to go much higher because of the fundamentals. And back then, there was increasing global macroeconomic and geopolitical risks. Arguably, the risks today are actually much bigger than they were even then, So silver's historic role as money and store of value. Milton Friedman talked about silver being the primary monetary metal throughout history, not gold. So gold has monetary characteristics as well. It's not solely a commodity. Declining supply of silver, and significant increasing industrial demand. The industrial demand may actually fall if you get a serious recession or depression, but we believe the investment demand will more than compensate for it. So it's funny, it's very, very similar to money supply, the amount of money in the world, the amount of millionaires, billionaires in the world. Even a tiny amount of diversification by high net worth individuals, family offices, could see the silver price increase very, very significantly indeed, So we made a similar call in 2009 after silver actually had quite a sharp fall. So we first got in 2007, it went up to $22. Then we got the bear market in 2007, and we saw silver prices fall very significantly from $22 to $9, as low as $9, and everybody said the silver was in a bear market, the bull market was over. We said, no, this is a correction, a very significant correction within a wider bull market, and silver would correct from its lows in 2009. And sure enough, it did, and it went up to $50 in the next 2 or 3 years, you know. So again, the fundamentals today are actually better than they were then, you know. So let's look at the long-term charts for silver, which are very interesting indeed. So here we have silver. Sorry, first of all, we'll look at gold-silver ratio. And silver looks very undervalued versus all assets, particularly stock markets, which are at all-time record highs. And when you look at the charts of stocks, I mean, it's just a straight line up for the last, you know, 8-9 years, you know, from very low on the left axis to very high on the right axis. Whereas you look at silver, this is gold to silver ratio. So gold to silver ratio shows that silver is very undervalued versus gold as well. So if you look at this here, anytime silver trades above, the gold silver ratio trades above 70 or 80, it tends to mean that silver is very undervalued versus gold and due to revert to the mean. So this is going back to you know, the 1916, 1917, you know, so you got 105 years of data. And the low side in recent years, we actually got as low as, this is monthly data. So if you actually divide the gold silver ratio in 1980, it was down here, you can see 15 to 1. So it was $50 per ounce, divide by $850 per ounce. So gold 850, silver 50 gave us this ratio here. So that's what happens when gold and silver go into bull markets, silver tends to outperform gold, and that's when you get the reversion to mean that silver becomes better value versus gold. So basically, more recently in 2012, obviously gold went to over $1,900 per ounce, and silver again went to nearly $50 per ounce. So you divide 1,900 by, quickly on my calculator, 50. The ratio came back to 38 to 1 right there. So we believe in the coming years, again, silver's going to it's going to go much lower, the gold silver ratio, and therefore silver will outperform gold once again. And you know, you can see in here, even in recent years, the average gold silver ratio is around the 40 or 50 to 1 mark, you know. So that's on the conservative side, but I do think we're more likely to actually go back down to the 38 level, and below that again, the 1980 level, I think is likely in the long term that we could go 15 to 1. So that means if gold was, let's say, $5,000 per ounce, divide 5,000 by 15, and you get a silver price at $333 per ounce. So that sounds crazy and completely outlandish now, and I'm not saying it's going to get there. I do think $50 and $100 per ounce is quite conservative, and at $200, $300, $400 per ounce silver is your blow off a bubble peak that tends to happen with silver. So that's the gold silver ratio, which clearly shows that silver up at these levels, gold silver ratio means that silver is undervalued versus gold. And as we've looked at in recent weeks and months, gold is very undervalued versus stocks, bonds, and most property markets internationally. So this is silver prices, the 100-year historical chart. So, I mean, look at this. This is 1980. So nearly 40 years ago. This is the monthly close. So silver closed at over $35 per ounce in January 1980. And then we got up to those levels again. Gold close 48.60 April 2011, again, the monthly close. So we believe that we're going to go above those levels again. We've seen all asset classes in recent months and years. We have the everything bubble. They are all at all-time record highs, nominal highs, and silver is one of the few assets that is languishing at a fraction of its nominal high, both from 8 years ago in 2011, but also in terms of back as far as 1980. I mean, there's very few assets in the world today, stocks, bonds, property, that are less than half the price they were 40 years ago. So this chart here, right here, shows you just how undervalued silver is. And that's This is in nominal terms, so it's obviously important to keep an eye on and adjust it for inflation. So here is again from macrotrends.net, excellent website, excellent charts, well worth subscribing to, and some of them are actually free, and you can just access them through their website. So this is silver prices, and we've actually adjusted it for inflation here, and you can see so silver was at over $115 per ounce in 1980, adjusted for inflation. This is US CPI, consumer price inflation, $115. And then if you look at the high that silver got up to in just recently in 2011, it was actually up above, it was nearly $55 per ounce. It doesn't quite capture it there. You can see it here on the chart. So $55 per ounce if you adjust for inflation. And today, again, we're back down $15, $16 per ounce. So it's 1/3 the price it was 8 years ago. And it's nearly 1/10, no, sorry, 1/7 of the price it was 40 years ago in 1980. So, you know, huge undervalue. I mean, silver is back at prices seen in the late 1960s, you know, and even as far back as 1916. Arguably, silver is actually cheaper than it was in January 1917, according to this price chart. This is again silver adjusted for inflation, so we have the inflation adjusted here, and this is at the CPI. There are charts. If you look at there's many people who question the official inflation metrics that we use today. If you actually use the inflation metrics that they use in 1980, so the CPI today is a very different animal. Consumer price index today in the US is a very different animal than it was in 1980. If you adjust for inflation in 1980, using the metrics that they use in 1980, this is our friend John Williams from Shadow Stats, and he basically he shows that silver prices, if you use the inflation in 1980, silver price in 1980 would be at over $700 per ounce. So, and today we're down here. So it looks, silver, you know, on an inflation adjusted basis, silver is cheaper, as it's ever been, you know. So and there's other metrics that I'll look at again in the coming weeks and months, showing how silver is undervalued versus goods, commodities, food, beer, stocks, bonds. It's just it's very, very cheap, and therefore everybody should be considering having an allocation to silver in a portfolio. It is more volatile than gold, and therefore you have to have an eye on the exit. You need to dollar cost average to gradually accumulate a position over a period of time, but you also need to be considering how you exit. And a lot of people don't buy silver because they're scared that, oh, it's so volatile and the price spikes up and then I won't know when to sell. But it's quite simple. You actually do what you do when you're buying in terms of dollar cost averaging. You dollar cost sell or you euro cost sell. So when silver gets back to $50 or 50 euros per ounce in the coming months and years, you should consider selling maybe 20%, 25% of your silver allocation. Take those profits. When silver goes to $90, 90 euros per ounce, you consider selling another percent of the portfolio, and then that way you're actually taking chips off the table, and you'll take your profits, and then you let the rest of the portfolio I suppose you allow that to rise in value, and you've de-risked in effect your exposure in terms of the volatility of silver. So and bottom line is, yeah, when silver is in the headlines again and it's on the front page of Financial Times and people are talking about Bloomberg and the personal finance people are writing stories about silver and how to buy it and why you should consider buying, that's when it'll be time to reduce allocation of silver. But today is the time to buy it. It's massively undervalued, as we can see from these charts and indeed from the fundamentals of the global supply and demand for silver. So yeah, it's and at the moment we actually have, if you buy just up until April 18th, we have a exclusive deal only for our clients. So if you buy $10,000 worth of silver or indeed gold, up until Thursday, April 18th, just before Easter, you will get 6 months free storage for your silver, and you will also get 1 free ounce of silver, so a 1 ounce silver eagle or silver Britannia from the US Mint, or indeed the Royal Mint UK, and you also get a copy of Jim Rickard's book, The New Case for Gold, and James is also quite fond of silver as well, and believes that it's going to do well in the coming months and years, akin to gold. So yeah, thanks for your time. Any questions at all, feel free to ping us in an email or engage with us on the usual social media channels. And yeah, please sign up for our market updates and video updates. And yeah, look forward to talking to you again soon. Thank you. Take care. Bye-bye.